Alright everybody, welcome back. It is, I'm recording Saturday, December 30th, 2023, and it's going to be based on, obviously, Friday's price actions. We're here at precisealgorithmtrading.com, and let's dive in to what the markets are doing. So yesterday was the last day of trading for the year. Monday's a holiday, and sorry I gave some bad information. Yesterday wasn't a half day, or it didn't close early. The SIFMA or something like that closed early, and I think it's some insurance vehicle. That's what I saw on Econo Day, and that's anyways. Hope that didn't bumble anybody, but the our systems generally just run anyway. So until the end of the trading day, and then you evaluate what happened and you move on to the next day. So, anyways, here's our automated trading system, and this is 6 months worth of data for the Dow futures, and it's all good. A little bit of pullback here lately, but mostly rising and then pullbacks along the way. So it's a little bit like this back here. It's interesting how these patterns play out. So on 12/29 right here, we had one trade, and it was a winner, so that's fine. This is the YM for 13 months. So, and you might say, why 13 months? Well, I put in 15, and it gives me whatever data is available in the system. And so, yeah, there you go. It might be 15 months, actually. 12 to 12 would be 12 months, 9, 10, and 11. Yeah, that's 15 months. So we got 15 months worth of data here, and you can see all we're looking for is a rising equity curve. So, and this one's good. So really nothing to do to this system. We just trade it and ride the wave. This is the Russell, and this is, yeah, same 15 months. And this is where I'm still, I'm scratching my head on how to do anything about these pullbacks. But I've run a lot of scenarios, and there's really nothing's working out yet, except to trade very little. And you guys saw what that was like when I had when I had this going before. It just had major equity pops every now and then it went sideways to down. Then it had another pop. Well, I still think this is easier to trade, and this is the trades for. There was just the one for Friday, and this holiday price action is interesting because there's just less of it. It's markets are, a lot of people are away from the markets for the holidays. So this pullback here, this is the Nasdaq. We've been on a pullback for a while now, and any minute now, I think volatility is going to kick in, and this thing's going to start rising again, and you'll get something like this again. Friday's trades, there were that many. Some winners, some losers. This winner here was a good one. That loser there was, that's the size of a major stop loss, and that's why it even says stop loss over here. So, and if you look at this thing on a 15-month basis, then this is basically this is your rising equity curve. So we have been in this pullback. We've been in pullbacks before. So this thing just needs to continue to take off. Alright, that was that. Let's move to the markets. So over here, this is the S&P 500 E-mini futures. And, I'm going to put in SPY and see what happens here. Just because I would like to see some volume and not have the after the market, there's some random period of time, it's like 15 minutes after 4 o'clock Eastern, that the E-minis will still move. So we can see here that that doesn't happen with the spiders. It doesn't happen with the SPX either, but the SPX won't give us this volume curve down here because it doesn't have volume tied to it. So you can see we got a red candle, and for what it's worth, this volume curve is two volume curves shoved together. And I made it so if it's green on the one, it just stays green, and if it's red on the other, it goes red. Well, when the reds come together, you tend to have more of a decisive move. And you can see when it's green over here, if you can see where I'm pointing on the hourly chart, when it's green and red together, in some cases you don't get the decisive move till it all coincides together, and it's the same way going back up again. So there's a little bit of just subjectivity to do with that, but as long as we're keeping to our rules, then it all will work out. And our rules that we stick by are this 30 period simple moving average, and I've got it colored so if it's going down it's red, and if it's going back up it's green. And well, when it's going up, it's you basically you can fake price action on a short-term basis, but at the same time this moving average is green, so the average price is moving higher, period. And until it rolls over and does something different, then um, the trend is higher. So where am I going with that? We're still way up here in the nosebleed section. We are due for a pullback, but we're also really close to all-time highs in pretty much all the markets. Uh, Not all the instruments, obviously, but all the major indices. So the S&P's up there, the Dow's up there. I think the Nasdaq's up there too. I'm gonna flip it back to the futures for the Nasdaq here, and I'd have to actually go do research. The highs here are um, they're on all three time frames. Um, I know they're the high of what's showing on a chart. I just don't know if they're the all-time high without. And honestly, I don't care. It's just to know we're really close to all-time highs, and a breakout from all-time highs would be pretty bullish. But in the meantime, actually pullbacks and then a lift into those would probably be healthier for the markets. What else we got? So that's the Nasdaq and the E-minis. Let's look at the Russell, because it's one that's actually it's at its 52-week highs. Its all-time highs, I think, are pretty far away still. I think that's what that 2460 is up there. The Dow, same kind of thing. I think this is the Dow futures. That's different than the Dow itself. So let's look at the Dow itself. And I don't know what the all-time high is on the Dow, but I know we are close. So we'd have to look that up. But again, what we're looking for is, let's flip this to monthly. This is a breakout of a monthly chart. We hit that previous high, which I believe is an all-time high. Let's go to time frame, do max available, and that's an all-time high. So when you get a breakout like we did back here, you can get a push higher. You can also get something like this and a pullback, And then, I mean, this happened to result in lower prices for a while, and then it took off like a shot. Don't forget, we're looking at a monthly chart here. So, but what you can do is when you recover like this and then you break the high, it can go for months. So what we're at right now is that what we're looking at? Are we recovered after this pullback? And what's this going to look like? Again, all this is really just to know where the market is. It doesn't really matter. I'm not going to trade off of the monthly chart. I'm going to trade off of the weekly and the daily. The weekly looks similar, and we have, let's look at our zigzag here. We've got a new break higher than the previous. So we got higher highs and higher lows after we've had lower highs and lower lows. So this is a definite uptrend on the weekly chart. And until we break this pivot down here, or another pivot, let's say we come down and we come back up and we put in a lower high and then we put in a lower low, then that would be a change in trend. We don't have that. Clearly, that's not speculation. That is just where we are. So, and a pullback to the 50% line of any one of these rallies will not take out the low, and it would not change the trend unless we come down, take to 50%, come up, put in a new lower high, and then we'd have to start coming down and putting in lower lows. I hope that all makes sense. So what else do we got? Russell? We did that. All right. So let's look at oil. Now, you might say, well, why would we possibly be looking at USO long, which I am, from these levels? And the reason, well, this is a personal decision, but I got in because we got a cross above the 30 and a pullback, and when I started buying on the pullbacks, and I even bought more on the pullback because all I'm risking is this amount right here. We got a hammer candle on the weekly, and I'm not saying that this is going to work out. All I'm saying is, at the time, this 30 period moving average was not falling off a cliff anymore. It was starting to curl up. And I also had price action on the hourly that was going that direction as well. We started breaking new higher highs and higher lows on the hourly, and unless this comes down here and takes out this low, we could put in a new higher low here and then go out and start making new higher highs. This is the only way to have a better trade than that is if you already started having higher highs and higher lows, and you got the same kind of a pullback, and you just continue on with, taking the same amount of risk, but you've already taken a new pivot higher on the daily chart. I'm doing it off of the hourly. That's what it boils down to. All right, let's wrap this up. Gold, GLD. So this is the kind of thing I was just talking about. Gold, a good entry would have been on this pullback right here because you got a new higher high after we were doing lower highs and lower lows, and then it started to rally. But you see here, we could have just literally bought at that break of the 30 period moving average before the pivot actually got taken out, and you could be part of that and then pull back. So there's different ways to approach this, and then while it's happening, we're putting in new higher highs and higher lows. You can see you wouldn't really want to buy here because we've already come so far, and on a pullback to these lines here is a possibility for a new entry. But generally speaking, we have 1 up, 2 down, 3 up, 4 down, 5 up, and these waves typically will be like we're possibly at the end of a move already. So that actually at that point I start really tightening my stops. All right, that's gold. Silver. So again, this is actually a good example of what I'm talking about as well. So I did not get in on this buy above the 30 period moving average. and we went on to make a new higher high after a series of lower highs and lower lows. So we put in new market structure high and a pullback to a higher low. So we had a low and then a higher low and then another higher low. This is where I started to buy with my stop down here. Now this has to go on and make new higher highs, and there's nothing saying it will. And you can see already that the hourly chart doesn't look great over here, but at the same time, I'm only risking this much. Now you can say that's, you're risking from $22 to $20.64. It's a buck and a half. Yep, that's what I'm risking. And a buck and a half on $22 is uh, whatever that is, 8% or something like that. Um, I don't think you can do this without risking something. So, all right, that's SLV. Let's go to stockcharts.com and look at the bullish percent indexes. So the industrials didn't move on Friday. The NYA down 0.11%. We are really close to a breakout here. Transportation index didn't move. The NASDAQ minus 0.04% or hardly anything. The SPX didn't move. The OEX didn't move. And finally, the NDX. It didn't move. So really a whole lot of nothing on Friday. The markets were down, and it is what it is. At this point, it's just going to be interesting to see how this thing unfolds into the new year, and we'll keep watching it from here. Well, Happy New Year, everybody, and that's it for me for the weekend. We will catch you again next week. Monday's a holiday, so it'll probably be Tuesday night when we do our daily review. Happy New Year.